Today on the My Mortgage Hound Daily Home of the Day, we are going to be diving into one of my favorite loan programs for real estate investors, the DSCR loan, also known as the Debt Servicing Coverage Ratio loan. Good morning, good afternoon, good evening, depending on where you're at in the world. Today, October 16th, Thursday, we're going to dive into financing investment property. Specifically, I found a new listing in Vancouver that's 2 fourplexes. And I'm going to show you how it's possible to finance these homes without any income documentation. No tax returns, no pay stubs, no explaining your P&Ls, none of that. We're using the property itself to qualify. So does the income cover the payment? That's what we're going to be looking at. So let's dive into things right off the bat. Let's just cover interest rates. Interest rates are pretty unchanged. 6.31 on our conforming. Our jumbo loans are 6.22, still beating the conforming loan amount, conforming interest rates. Now the new jumbo loan amount is $818,000. So if you're over that, you're at the 6.22 jumbo rate for a national average, and then our government loans, FHA, 6.03. Will we break that 6% threshold like we did during the last Fed meeting? We got down to 6.95, so we'll be watching that closely as we approach the Fed's next meeting at the end of the month. Okay. So I found this listing yesterday, and I didn't post a video yesterday because I really wanted to dive into this one and give it some more research. We're going to 4311 Polo Mondon Street, I'll probably butcher that, in Vancouver, 98661. Now this is 2 fourplexes, okay, being sold as a package deal. Very short description. Long-term owner selling 2 fourplexes side by side for a total of 8 units with good rental history. 8 units package allows for strong rental income, 8 carports plus 4 parking spaces for easy convenience and good location around the corner of public transportation. Consider Vancouver your next rental investment. Okay, so if we look at the map, this is just south of SR 500 in the Orchards area, very close to Vancouver Mall. So a good location for a rental. Let's take a look at some pictures. Now this isn't a luxury property, but we'll take a look at these units. Now this property was built in the 70s, I believe. So they are right side by side. Here's an example. Now I did the math, it's 16 bedrooms. So these are all, as far as I could tell, these are all 2-bedroom units, sitting at about 1,000 square feet a piece. Here's your kitchen. So pretty basic. Carpet looks good. You could do some updating, but it sounds like most of these units are already rented out. So nothing too sexy in the pictures. Built in 1975. So there are many ways to finance an investment property, and especially a multifamily. This tool is one of the most underutilized financing tools out there, in my opinion. It's the DSCR, Debt Service Coverage Ratio loans. And the way you qualify is you need a credit score, and you need your down payment. In this scenario, we're using 25% down. That can be 1031 exchange from another property. So maybe you're wanting to sell off some single families and 1031 exchange that money into a multifamily investment. And that's it, your down payment and your credit score. When we order an appraisal on this home, we're going to also order a rent forecast. So the appraiser will do an analysis and tell us what the forecasted rent is, and we could possibly use the current lease agreements in place. And what we are looking for is the payment to be covered by the rent, and that is broken down in percentages. For today, we're just going to say that the rent is going to cover 100% of our mortgage payment. So let's do a quick breakdown. 25% down would make our loan amount $1,575,000. The national average on a program like this is 7%. Now I can tell you there's a lot that goes into the interest rates on these loans. You can add prepayment penalties to bring that rate down. Based off of how much you put down, those type of factors, your credit score, are all going to affect your interest rate. Today we're going to use an average of about 7%. And then there is an option to make these loans interest only. Now that may perk the ears of some of our investors out there who are really trying to cash flow a property. Having that interest only option might be attractive. The interest rate average on a program like that with interest only would be 0.5% higher, so 7.5%. If we look at a breakdown, now there wasn't a lot of information on this property, so you would definitely want to reach out to one of our preferred real estate agents of the channel to get some more information. Principal and interest with 25% down, $10,478. If we did the interest only, that's $9,843. Property taxes are right around $1,350. Do your due diligence on that. And then homeowners insurance, I estimate somewhere around $500. Also do your due diligence there. So if we add all those numbers together, we get a total payment of $12,328. So when we look at qualifying, we're going to look at, does the forecasted rents cover that payment? And if they do, we're in the green. So we can do some more due diligence, pull lease agreement, see exactly what they're renting for. If you do the math, that's about $1,000 per unit a month. That seems very reasonable to me. But I'm not a leasing agent. I'm just a mortgage guy, but that seems doable. And there's some room to negotiate. There's a lot of options you can do here, but this is one way I would finance the property using this DSCR. If we did interest only, it'd be $11,693. So guys, this is a hard product to condense down into 10 minutes, but I hope I piqued your interest. I hope you are now aware of DSCR loans. If you want more information or to see if this would be an appropriate financing tool for you, reach out to me. All my information's in the description. You guys enjoy your Thursday, and we'll be back tomorrow with another My Mortgage Hound Daily Home of the Day.